Good afternoon, and thank you for joining us today. My name is David Talbot. I'm Managing Director and Head of Research at Red Cloud Securities. I'm delighted to host a Red Cloud webinar on uranium today. We will hear from UEX management, including Roger Lemaitre, CEO, and Evelyn Abbott, CFO. During today's webinar, they will provide an overview and outlook, and then we'll take some questions. You can type the questions into the chat box at any time, and we'll get to as many as we can. But before we kick things off, I first want to discuss the fine print. During this UEX webinar, forward-looking statements may be made. I would direct listeners to their forward-looking statements outlined on page 2 of their presentation, and that can be found at the company's website, uexcorp.com. For Red Cloud Securities, I would highlight this webinar is for information purposes only. It should not be considered a solicitation or a recommendation to buy or sell securities. We note that this call does not consider your particular situation or needs of individual investors, and participants should rely on their own investigation, seek their own professional advice before investing. Please see our most recent research located on the Red Cloud website for specific disclosures on UEX. But before Roger and Evelyn step up, I would like to say a few words. First of all, a plug for our upcoming uranium conference, Thursday, May 13th. We will have presentations from 18 companies, including UEX, plus a keynote address from Grant Isaac, CFO of Cameco. And I will host a fireside chat with 3 of the largest uranium investment firms, Sachem Cove, Segra, and L2. Attendees can register at redcloudfs.com. Now, the nuclear industry is in good shape, and its outlook is even better. We should see a trickle down into the uranium sector, but low prices have been in the way up to now. Now, that said, uranium demand continues to rise. Government support is increasing, particularly in the US, China, and Russia. Uranium is getting recognition as a green energy source, and China is on track to become the largest nuclear power producer. Uranium supply has been falling. There has been significant mine curtailments, and COVID-19 impact was severe. But with a decade of low prices, we have not seen investment necessary to sustain production levels, and those utilities that have been sitting on the sidelines will ultimately have to buy uranium to feed their power plants. Now, the industry is stronger than it was pre-Fukushima. There's 443 reactors in operation, same number as 10 years ago. Global uranium demand is 177 million pounds and growing at 2.5 to 3% annually. There are 53 reactors under construction. China plans to triple its nuclear capacity by 2030, and that will put China 50% ahead of the US. India plans 21 new reactors by 2031. Japan is still targeting 20 to 22% nuclear, and there are other countries entering the sector. United Arab Emirates, for example, started three operations, 3 reactors, and 4 more are planned, and then several more countries are coming. And I'd point out that Russia does a great job as a one-stop shop for many of these countries looking to go nuclear. They help with the country's regulations, funding, construction, even provide the fuel and the waste handling. And about 1/3 of all new reactors are being built by Russia around the globe. The US, too, is building a couple new reactors and maintains 20% of its electricity coming from nuclear power. What has changed in the world is the world's focused on lower greenhouse gas emissions. And there's really just 2 ways to do that with baseload power: hydro and nuclear. Now, Biden's recent White House fact sheet on the $2 trillion infrastructure plan made it clear that American hydro and nuclear need to be leveraged. And this could include small modular reactors or advanced reactors, plus support to those industries. Now, uranium production declined to about 123 million pounds per last year. That leaves a 55 million pound gap between supply and demand. MacArthur shutdown was a shock to the system when it closed. People saw that as the largest mine and presumed it was the lowest cost, given its grade. Uranium jumped $2 a pound on that announcement, and that's only the 10th time it's moved in such a large amount in a single day over the past 15 years. We have seen major operations go offline: MacArthur River, Rabbit Lake in Canada, Kamenak in Niger, Ranger in Australia, Akdala and Zariknoye in Kazakhstan, and almost everything in the US. So uranium production, it's dominated by just a few mines. The top 10 mines produced 55% of all uranium in 2019. And it gets even scarier when considering jurisdiction. It's only produced in 14 countries. 7 of them produce 94% of uranium. Kazakhstan, Canada, Australia, Namibia, Uzbekistan, Niger, and Russia are those 7 countries. So bottom line, with the disinvestment in the uranium sector, there has been a lack of exploration, there's been a lack of uranium discoveries, and new mines will be needed in the coming years to replace mine closures, let alone cover the growth in uranium demand. So I see that as a good segue into how UX can help solve this problem. And with that, I now turn it over to Roger and Evelyn to update our audience on UX.
Thank you, David. Thank you very much. And I'd like to take the opportunity to thank Red Cloud for hosting us here today. We're looking forward to talking to you about our most recent news last week. Before I do, excuse me, I'd like to introduce Evelyn, our CFO. Evelyn, if you say hi.
Hi, everyone. Thanks for joining us today. We're excited to share our news we just released on last Thursday morning, about the acquisition of JCU Canada.
Yeah. We think you often hear in the M&A world when someone makes a transaction, wow, this is transformational. And I think, it's a little bit overused word, but I think, and for us, and of course, we're a little bit, we like where we're going with this transaction. We do believe it to be really true. It's going to transform UX into a premier uranium development company with a little bit of sustainability that maybe you don't see everywhere. So with that in mind, we'll jump through what we're going to do. Once again, forward-looking statements and also a notice to U.S. persons. So if you are we're going to be relying upon these both in the U.S. and in Canada. So keep that in mind. Oops. A little bit about us. So over the last couple months, the uranium space has been pretty volatile, and so I would say our stock price is not much different. We opened today at a market cap of $176 million. Over the last week, we've ranged from 29.5 cents up to as high as 41 cents here earlier today in trading. And a lot of that appreciation based on the news we announced last week. We have about $5 million in cash. Cameco Corporation, one of our founding shareholders back in 2001, is still our largest shareholder. And over the last couple of years, groups like Segra and other funds have been coming into the space quite rapidly. So one of the big things that we announced on Tuesday or Thursday last week that we'll be buying JCU, Japan Canada Exploration Company Limited. It's one of the most unknown companies in the uranium space, particularly in the Athabasca Basin. Yet they're one of the oldest. JCU has been actively exploring with the major players in the Athabasca Basin since the year 2000. They picked up all their assets from the legendary explorer and developer PNC, once again, also another Japanese company. JCU is owned 100% by OURD, who's been a global player in the uranium space for well over 35 years. They're part owners of the Cominac operation in Niger. They've owned a piece of the McLean Lake Mill and the Midwest operations in Canada that are run by Orano. What we love about this transaction, we certainly have had a long-term history with JCU. Both our principals here at UX from our time working at Cameco and managing a lot of the JCU joint venture projects with Cameco, and more recently with our joint venture at Christie Lake that we started in 2015. We have a long history working with JCU, but putting these two companies together is very much like taking two pieces of jigsaw puzzle, putting them together. They fit extraordinarily well and they're complementary. We believe the combination of these two companies will make UEX into a long-term sustainable development partner and production company with access to potential multiple sources of low-cost uranium, but also having a pipeline of really robust opportunities to keep the company going over the long term. And we hope that by the time we get through the end of this presentation, you'll feel the same way. So the new value proposition for UX post-transaction here is that multi-source, low-cost potential uranium production. We'll hold one of the largest uranium resources in the junior sector. They have a historical resource of 97 million pounds. We have an NI 43-101 resource of 99.7 million pounds, so just combined over 200 million pounds. That product will be sustainable because of our long-term mid-stage resource growth upside. these are a lower risk exploration potential that we've been talking about at UEX for the last couple of years. And whether or not you like the uranium space, hate the uranium space, think uranium companies are overvalued, undervalued, or right, I think this transaction will demonstrate, shows an incredible opportunity for investors because of where we're rate compared to our peers. So I won't get into too much detail. This is more for people who want to have a hard copy after the fact. We'll own 6 of the next 10 Canadian uranium development projects. 3 of the 6 tier 1 projects. Our acquisition cost is very attractive when you compare it to our current valuation per pound or that of the Athabasca developers. You look at some of the pieces that we're going to pick up here, like Wheeler River, Millennium, have been sold and have market values far in excess of what we're doing here now. Key projects we're going to be acquiring here, probably the highest profile in the marketplace today is owning a 10% stake in the Wheeler River project that's managed and operated by Denison. A lot of news out about Wheeler River in the next over the last couple of years. We're pretty excited to become a partner with Denison on this project. Revolutionary new potential technology, if we can just tweak that opportunity right, that will bring probably one of the nearest term production opportunities in the basin. Longer term looking out, the Thelon Basin of Nunavut, just west of Baker Lake. Rano runs the Kikavik project, and we'll own a substantial piece of that through our ownership in JCU. It's a project that has gone through the permitting process, and it would be akin to opening up a brand new camp in a brand new basin. Probably the one project that people don't know as much about because it hasn't been in the public domain to the same degree as the Millennium deposit discovered in the year 2000, oddly enough, which Cameco would be the majority partner. We believe this is one of Cameco's premier development projects going forward, and we think it's in the medium-term production window for development, and we think it's important for Cameco to develop this project in the future to sustain its overall output of the Athabasca Basin. The resulting ownership of JCU will give us an interesting sort of dynamic in the Canadian uranium space. On this little chart here, the vertical axis is the grade of the deposit. On the horizontal axis is the total resources and reserves. And the size of the bullet or the dot here is the size of the resource. And while you can see Cigar and MacArthur out there, and where Arrow will be a substantial player in the near future, you look at those dark blue dots with the UX logo in them. We'll have an ownership stake in quite a few of these particular projects. And I think that creates a unique opportunity for investors. From an investor point of view, you look at UEX compared to our peer companies, both in the U.S., in the Athabasca Basin and abroad. And before the transaction was announced on April 27th, last week on Thursday, excuse me, we were trading at a market cap per pound of about $1.43. And of course, since you're essentially doubling the resource, that gets cut nearly in half with the announcement. With the price appreciation we've seen since Thursday last week, we're probably trading in and around that 95 cent a pound range now. And you compare that, so it looks compare very favorably to either our Athabasca peers or global developers or the U.S. producer average. I think that creates a lot of room for investors as they start to digest exactly what it is that we're bringing the JCU transaction to the marketplace. On a comparable company basis, compared to our peers on a market cap basis, there's a lot of room for movement. And, as we've been talking about this over the last week or so, about what we're doing with the transaction, whether you like UEX's pounds we've had historically in the portfolio, you think they should re-rate or not, I think there's very little doubt with what JCU transaction brings to the table and how you might rate those. There's absolutely still a lot of room to move with the valuations here. As part of the transaction, we'll also be picking up another 9 projects, minority interest across the Athabasca Basin. Since JCU, like UEX, were one of the first players to be in the basin, and actually JCU even before UEX through its holdings, through its acquisition of the PNC assets, very strategically located assets, as you can see, in and around the existing mine sites, or on or adjacent to some of the most important plays like Millennium, like Wheeler River going forward. It'll make us have an ownership stake in over 435,000 hectares of land. And it's not just the amount of land, it's the quality and location of that land and the partners that we'll be involved with. We have a long history of working with Orano, of course. We'll be relatively new to working with Denison. Cameco's been a long time since initial day shareholder, but JCU certainly been playing with all those partners for the last 20 years, and so we're really excited to be their partner on a series of projects that probably don't, these minority stake projects, give UEX some opportunities for value enhancement through partnerships, etc. But the holding costs of these are next to nothing, with no significant costs to make that required to do work over the next 7 years to hold this land package in place. And what this does, when you combine the assets together, in orange here are the projects that we'll be picking up interests in through JCU, and in blue are our projects existing today. And what it does, like I said, it's a very complementary transaction. They're bringing nearer term production possibilities like Wheeler Millennium and the longer term Kigovik to the market, with our assets that are development ready projects like Horseshoe Raven and Shea Creek, and a very large portfolio of grassroots projects. But what's really exciting about the sustainability of this potential company long term is those mid-stage and resource level projects, where we have multiple targets that are relatively low risk because they're either mineralized hole that's yet to be followed up, or a trend that's only partially explored yet has mineralization on it, like we see at Christie Lake, that ties back to the McArthur River main fault structure. That gives a long-term sustainability vision to this new company, and it looks a lot more like you'd see, excuse me, in a mid-stage cobalt or mid-stage copper or maybe gold company than you see in a typical Athabasca company, Athabasca uranium company. And we think it just gives us a bit of an advantage in the long term, and a sustainability that would be pretty challenging for a lot of companies, that are exciting for companies to have. So with the transaction, when we close at the end of June, our focus will change, obviously, with this new asset, from being a growth and resource development story to being having visibility to short-term production. We'll be assisting our partners with the Wheeler River development as best we can. But because we're not the operator, it's going to give us the opportunity, and the financial burden to move forward is not immense, and certainly something that's very manageable. We'll still be able to do work on our growth end projects like Hidden Bay, Christie Lake, and we think the #1 brownfields exploration project in the basin at Shea Creek. Our cobalt assets that we've been working on, and we've announced our second cobalt discovery on the Westbrook project here earlier this winter. We will still be looking to extract value, and I think it becomes even more important for us to try to find that value in what will become a larger pure play uranium company. Longer term, we'll be working with Cameco on the Millennium development, which we think will probably tie into the Cigar Lake depletion at some point in time in the near future. And we'll work with Orano and on our 100% owned Horseshoe Raven Creek and Horseshoe Raven, projects, and bring them to the market when the market signals a need for those pounds. We'll continue to look at opportunities like we have here as well. But the patience is certainly important when we look at these opportunities. On a value appreciation basis, we're buying pounds here at a pretty attractive price if you net everything out, cash costs out front. We are assuming a little bit of their liabilities, which are not a huge concern at all for us. If you don't like our pounds, but you like what we're bringing into the stake, you can look at the value of Wheeler River in the marketplace today and say that our share of that would be on a max value, significantly more than the cash costs that we're going to outlay to buy these assets potentially. You can put a discount on that; it's still going to be pretty attractive. In 2012, Orano's predecessor, Reba, did sell a big stake their stake in the Millennium Project to Cameco for what would be just under $8 a pound. At that time, the resource was about 67 million pounds, not the 105 that it is today. And so if you were to say, okay, someone's going to pay $8 a pound, what's the value of JCU's component there? It could be seen as that high. And Kigovik pounds have never had any market exposure whatsoever. So we're very interested in seeing what the market thinks of these three core projects as we go forward. So with that in mind, excuse me, we'll talk a little bit about the key projects in that little box there in the top right-hand corner. Wheeler River, very well known in the marketplace, 2 key deposits, and the focus has been on Phoenix. We really like what Denison has been doing with these projects and moving Phoenix forward with the ISR test program that they've announced is underway. They've filed a project description with the Canadian Nuclear Safety Commission in the province of of Saskatchewan, and we're expecting that they'll finish their environmental assessment process to finalize the EIS in early 2022, which is what their plan was. And we're pretty excited about seeing that project move forward. We're not sure exactly until we see the feasibility study exactly what the time frame is, but we do believe it's one of the next couple of development projects in the Athabasca Basin. Millennium, which people know a whole lot less about because it hasn't been in the public eye very much. It was one of the first the new wave of discoveries back at the beginning of the last cycle, found in 2000. 105 million pounds of resources at very high grades, as you can see. Dominantly on almost all but a couple million pounds are in the basement. So it's more amenable to underground mining techniques that you'll see in other underground mine or basement hosted mines in the Athabasca Basin, like in Eagle Point, or what Arrow will be looking at doing as well. It's gone through part of the regulatory process. It was going to the public hearing process in 2015, when due to very low uranium prices, Cameco decided to withdraw the application. So we believe, without having gone and talked deeply with Cameco about where this project will go, when Cameco feels the need to move this project forward to keep their market share of pounds out of the Athabasca Basin intact, this project probably doesn't have to start at ground zero to go through to redo the permitting process, and I think that'll help accelerate development. At Kigavik, a very similar story, but up in Nunavut in the Thelon Basin, which is an analogous basin to what you see in the Athabasca. Orano here has a large position in the project. There are 10 known deposits here. 5 of them are in their current resource of 133 million pounds. Amenable to open pit and shallow underground mining methods. And this would be akin to turning the clock back 40 years to the beginnings of the Athabasca Basin, when either Cluff Lake or Rabbit Lake deposits were found and what you find around it. Great potential. This project has also gone through the permitting process. And it went to the finish line, and the permit wasn't granted, but it was more to do with the fact that the operator didn't want to propose an official starting date to acquire the mining license. And we believe that when Orano feels the need to move this project forward as well, that because of the history, there was no, to our understanding, no problems with the technical, environmental, or social aspects of the proposal. This will move relatively quickly as well to the finish line and permitting process. Backstopping those key projects will be projects like Shea Creek, where we have a 95 million pound resource here with our partner Orano. We believe that the Shea Creek deposit has one of the best, and if not the very best, brownfields exploration upside in the basin. Most of the resource we find at Shea Creek is found in the Kiena deposit, dominantly hosted in the basement rocks below the unconformity. Where 2 fault structures, the main trend that's highlighted in the red unconformity mineralization, and east-west cross faults come across. Those east-west cross faults are very steeply dipping, and the holes are vertical, which is very difficult to hit with vertical. It's hard to hit such a vertical structure with a vertical hole. And we believe we've identified, by looking through the core, 10 areas on the property in the footprint of that existing deposit where you don't see blue underneath the red mineralization, where we think we've identified not just either mineralization or very strong indicative hydrothermal alteration within those east-west faults that were previously not identified. We think with our help with our friends at Orano, we can grow this deposit with a very modest investment in the near future, and we're working with our partners to make that happen. Horseshoe Raven will be our long-term sustainable project to help keep production in the longer-term future. It's a fantastic project, plunk it down anywhere else in the world. Low grade by Athabasca standards, but pound for pound, profit-wise and cost-wise, it's very comparable to what you see in the Athabasca Basin in places like Millennium. So we believe that this project will move forward to help sustain output in the long-term future. Christie Lake is a great example of our mid-stage projects. We have the extension of the McArthur River fault structure, which shows every pound of material at McArthur River comes across to Christie Lake. We have 3 deposits and counting. We've got drill indicative geological things we want to see around deposits located both between our Paul Bay deposit in the McArthur River property boundary, and actually in the other direction away from McArthur River, northeast of Aurora, that we'll be testing with a $2 million program this summer. But that's the kind of opportunity in our mid-stage portfolio that we're working with. Just quickly a little bit about people, because we get asked about cobalt a lot. With our new discovery at Michael Lake, we now have 2 cobalt deposits and counting on the West Bear project. We still are looking at opportunities actively to try to be able to to get value for our shareholders. We think with this transaction closing and the movement in the cobalt price, that we hope that right partnership or spin-out opportunity will emerge here shortly. So once again, the new UEX post-transaction, you're getting insight, you're getting an exposure to a developer with potential for low-cost multi-source uranium production. You have one of the largest resources held in the uranium sector. We're sustainable because of our pipeline of opportunities. We got growth potential through the mid-stage and resource growth opportunities. And comparative value is compelling. Of re-rating potential is certainly there. So with that, Dave, I'll turn it back to you for any questions.
Okay, thank you very much, Roger. Great presentation there. We will now start the Q&A portion of the webinar. Reminder to everyone, please type in any questions that you might have. We'll get to as many as we can. So, Roger and Evelyn, we're going to start with a couple of deal-related questions here. The deal was done at a major discount to peers. Now, how was the deal price determined or so successfully negotiated? And, was this part of a competitive bidding process?
Well, we certainly can't speak to whether it was part of a competitive bidding process. We had heard in early December that it was available, and we reached out to OURD, the owner of JCU. Like we said, we have a long history with JCU, both from our previous lives and our many members of our team when we worked for another company and we managed some of these joint venture projects, and also with Christie Lake joint venture that we've tied up with them. We've had another long-term joint venture with them at BD River that goes back to 2008, 2009 range. And I think we've been able to build up a bit of trust, and we over that long period of time. We were certainly discussing price, and our indicative offer was out early in the new year. When the market was in a very different place than it is now. We thought it was something we could fund and afford, and they agreed to the price. I can't really speak to what the other potential suitors might have been, or what they were willing to pay, or where they were in the process, because that's not something we're privy to.
Thank you very much. Now, this is a definitive agreement with OURD, but we do have a question asking how certain this deal is to close. Is there any possibility of somebody coming in and scooping up JCU?
We do have the standard provisions to protect ourselves here, and I think also that trust is really important. We find that this is, when you look at Japanese companies who's going to give their word, they give their word, and the majority of the shareholders, it's subject to two conditions: us completing a financing to complete the acquisition cost, and they're getting their shareholder approval. And we're pretty comforted by the fact that 29 of these companies, or the ownership of OURD is 29 of the largest Japanese companies. This is, it's not a huge part of these 29 companies' businesses. So it's not something that whatever they made a decision, they made a decision. And their board has 9 of those 29 shareholders represented, which cover well over half of the voting shares of OURD, and they've already approved the deal. So we're pretty comfortable that this will close, and we have provisions to protect ourselves as well.
Okay, so essentially you're protected if somebody does come in for a superior bid. Is there a break fee or right to match, or you just don't think it can get that far because the deal is done?
Oh, I'm sure if someone offered $10 trillion, there'd be a question out there to say, oh, maybe we should change our mind over there. But we're pretty comfortable with where we're at with the provisions. I don't want to get into the details of what we have behind it, because that's confidential with JC or with OURD, at this time. But the standard provisions do apply.
Okay, and sort of on the same sense here, not that you can put words into the mouth of JCU, but a few people are asking, why would JCU sell now, given that most uranium developers and producers are talking about the cycle being in an upturn, right now?
I think two key reasons. One is, OURD has been a long-term player in the business. They've been through the cycles. They know the cycles. I don't think they look at what's happening in the next short term. They're looking long term. There's been substantial changes in OURD this year as well. Substantial changes in the shareholding. JCU was owned by 3 shareholders last year, and at the end in October that changed to being OURD. So I think one of the things to question yourself if you're an OURD shareholder is, how important is this business to you? And I guess they made a decision that it was time to exit, regardless of where they are in the cycle. I can't really speak for them. They made a decision to do it now.
Yeah, fair enough. Okay. This is a comment, but it sort of leads to a question here. I hope this is the end of share dilution. With all these properties on the UX and now JCU list, how do you finance the deal essentially? And what properties might you divest versus go out and try to raise more capital?
Well, certainly in order for us to divest of anything, we have to own it first. So we can't sell things we don't yet own completely. So we're going to have to finance our acquisition cost here, and that's I don't think that's going to surprise anybody. And then once that's done, we do have commitments that we'll keep through JCU that we'll honor over the next few years. And I think that will but they'll also create opportunities. And what I'd like to say, we're not wed to a particular strategy. So we've had people ask us, "Oh, why don't you sell this off or that off or this off?" And going, "Well, we could. Are you going to go to production?" Well, we could. Or are you going to lock, stock, and barrel sell it all? And I think if you're going to give justice to your shareholders in the uranium space, you have to go and put these things in production on your own. And if someone comes along on the way and decides they want a piece of this or all of that, you look at them on a one-off basis, and at that time, what the market suggests can be done. Otherwise, if you just say, if we say we're going to sell everything that we got, we're going to get, one, it creates a bit of a challenge for us. Two, no, it doesn't help shareholders out at all, because nobody believes that there's value creation when you're sitting on an asset. So that being said, we do not have in this current set, other than our Wheeler River commitments in the next 3 years, and we certainly want to participate in that. We don't have any life-threatening commitments that we have to do that we couldn't say, we don't want to do. All the UEX projects, every single one of them right now is discretionary. We can decide or not decide what to do with them. So we can control how much cash flow in or out we need over the next couple of years.
Roger, I would add to that. Our current cash position in UEX is over $5 million Canadian, and that will take us from a G&A perspective through to the end of 2022. We're also planning on spending a couple $1 million this summer on a drill program at Christie Lake. That is also already funded. And with the cash that will come with the JCU transaction within that company, it'll fund our commitments for Wheeler River and any other commitments within that company through to the first quarter of 2022. So other than the purchase price, we're very well funded to the end of next year.
And on top of that, the grassroots projects that we're going to get are going to create opportunities both for partnerships, spin-outs, whatever you might want to think within our portfolio and what we're bringing elsewhere. And it's just about, and once again, it's about patience and doing it at the right time. Certainly people have been approaching us to do what we call a call option on an exploration project as opposed to an option on an exploration project. And what I call call option is like, hey, for $2 million, we'll take that project off your hands and we'll spend that $2 million over the next 8 years. Well, that's a call option on an Athabasca property, not actually doing a property. It's do and doing the work that we need to do to evaluate its skill or its potential. And for that, we're not willing to do deals that don't answer questions, and we don't have to because we don't have to. It doesn't cost us anything to hold them.
Yeah. And I think, a lot of these projects are not moose pastures. So we aren't necessarily looking for people to come in and sit on them or do nothing. So.
Exactly. I think a lot of our grassroots projects could be flagships for newer starting companies. And, quite frankly, most of them, we hold them to almost a statutory maximum of 21 years. So we're not worried about being out of pocket of any significant amount of money to hold them.
Yeah. So if you were to come to market to cover the cost of this, obviously you can't cover the cost with flow through, but would you prefer flow through funds for exploration work, or how would you see coming to market?
Do you want to go with that one, Evelyn?
Sure. Flow through has always been our preference on the exploration costs within the company. I think this next financing to fund the JCU transaction will be mostly hard dollars. And certainly we can look to flow through in the future as we have in the past. However, I think at this point we're focused on that acquisition cost and maybe a little bit of money to top off the till to bring us through to the end of next year.
And the Wheeler River costs for the development are certainly not flow through eligible.
That's right. Thanks, Roger.
So, love the deal. Keep up the good work. We do have a few of those comments out here. Does the acquisition change the order of exploration priority for you? What are right now? Let's assume this goes through. What are your highest near-term priorities and catalysts?
Certainly Wheeler River for multiple reasons. One is it's a mandatory joint venture, so you have to, but we don't have to be encouraged to want to participate in that. That's an easy want. So we'll be doing our share of Wheeler River for sure. We don't foresee Millennium ramping up next year, but if it did, that would be our number 2 priority. I think we go back to the mid-stage and resource level projects at UEX right now, and that would be Shea Creek, Hidden Bay, Christie Lake, and then whatever we can do with West Bear to find a home for it.
Yeah, there's a lot on your to-do list at this point. So.
Yeah.
Okay. Sort of keeping Wheeler River in mind here, it looks like you will have to start contributing to the expenses of that project. Maybe, they're looking to raise what, $350 million in capex, 380 million in capex for that. You are required to pick up 10% of the tab going forward, correct?
That's correct. So we're looking at a $35-ish million spend over the next 4 or 5 years. I think that's very manageable.
Okay. With some of the other companies, projects, could you maybe go into your sort of scheduled exploration development burn over the next couple of years?
Yeah, so the Wheeler River one being the one that we're going to contribute to no matter what. Everything else is pretty discretionary. So we can just pick and choose. We're going to spend $2 million this summer at Christie Lake doing some work there, following up on our Aurora North and our B trend target, excuse me. But after that, we can decide, we're going to work with our friends at Arano to get Shea Creek going, but that's not completely in our control, and it's discretionary how much we spend there and the time frame we spend it on. So we could spend as little as say $3 million to keep our share of Wheeler River next year, or whatever that could be. 4, could be 2, and we're not sure exactly where things go in 2022 yet. And we can decide to spend $5-6 million on other projects if we want. But we can choose to do none of that, and we have that flexibility. So we're gonna let where the uranium markets go kind of dictate what we do on those other projects.
Okay, I have a question about resources versus historical resources, that you're going to bring into the portfolio. Essentially, from a TSX standpoint, you've added 97 million pounds of historical resources. But, I really want to point out here that these should not be considered inferior. They're the same pounds that are owned by Denison, Cameco, Orano. Can you maybe discuss why these are called historical resources? Yeah,
this is one of those weird twists that 43101 brought to the table that I'm not sure it was intended to be this way, but it's certainly the way it ends up being. So clearly, Wheeler River resources are current in the eyes of Denison Mines. But because UEX's name is not on the resource report, it's not current for us. So these are sort of legal technicalities. The same thing would apply for both Kigavik and Millennium. They've got resources done internally by the majors that we can't classify as current because we're not on that resource report. Or if it was done internally, say for Cameco or Orano, we have to be certain it fits 43101 compliance, and it has to have our name on it as well. And since we don't own the assets yet, our name can't be on any one of those 3 assets. So it's a weird technicality, and probably when we complete the transaction, one of the things we're going to do is work forward to rectify that historical prefix for those resources.
So maybe could you comment on perhaps the valuation proposition here? You're really looking for a re-rating on some of these pounds, correct? Those pounds inside Denison shouldn't be worth any more than those pounds worth inside you.
Sorry, I think it was the pounds in Denison shouldn't be worth any more than the ones
any more than the pounds inside UX. So for Wheeler River in particular.
Yeah. No, I think the question is, what will the market see these pounds trend valued at? And we're not really sure. We're waiting to see what that sort of shakes out at. People could argue that UEX's pounds that come from UX proper should be re-rated. I mean, certainly we've been making that argument for a while, but the market may say, no, we only like the Denison pounds or the Millennium pounds, and we'll value them at either the same value as Denison gets for Wheeler River pounds or a discount to that. But is it better than the current $1.43 pound that we're getting now? Boy, pretty hard to say it wouldn't be worth more. But that's my humble opinion, and I'm a little bit biased.
Okay, good, thank you. Kickback licensing, that was turned down a few years back, largely because Ariba didn't provide a starting date. How easy is that going to be to kickstart the permitting process again? Have the requirements or regulatory process changed over the last several years? And what kind of uranium price might you need to get Kickback up and running?
Certainly the rules have changed. I mean, we've seen Bill C-69 come into play, and that will have an impact. I think when you look back at what Orano or Ariba / in the past on the social end front, certainly expectations on ESG have changed in the last 7 to 8 years. So those things will have to be updated, but the technical end of things I don't think needs a whole lot of updating per se. So we think it does give you the opportunity to move that down the pipeline of the permitting process a little bit quicker. You're not going to have to redo all the engineering and the tailings and all that kind of stuff. That work's already been done, and it's sort of been out there a little bit to the CNSC. But that being said, the regulator works at their own speed.
Okay, and sticking with Orano and their plans, what are they planning to spend for Shea Creek in the next year or two? Are they just sitting on it like majors tend to do? Or, I know UEX wanted to be more aggressive on this project last year, but maybe not as much now that you have several other options.
I think COVID had a really, I can't speak for where Orano's going with their things, but certainly, watching what happened to them from the outside looking in during COVID, we saw a lot of cutbacks at Orano in Canada over the last year, and I'm sure that the budget constraints due to the Cigar Lake shutdown and toll milling has hurt them. So they've pared back work this past year. Whether they change next year, we don't know. We are certainly talking to them about other ways we can get that project up and running, and that's an ongoing discussion.
We were in discussions with them prior to starting this negotiation process with JCU, and so it did take a bit of a back seat at that time, but certainly we'll revisit that later this year. Yeah,
and I think we do believe it's one of the best growth opportunities out there for pounds in the space with relatively lower risk. So it's still a high priority for us. But is it number one priority for us going forward? I'd say probably We the River in the short term becomes that.
Okay, and I'd say your cobalt nickel discovery has probably been front and center with most of your news so far this week. Any possibilities of doing a JV with a larger miner, Rio or BHP or something to advance that cobalt nickel asset, or rather than creating a spinco at this point?
Well, if you're out there from BHP or Valley or whatever, give us a call. We'd love to talk to you about it. Absolutely. No, we're very open-minded to partnerships, whether it stays in UEX as a partnership, whether we do a spin-out or we find a more traditional joint venture. We're open-minded to all those things. We have explored a handful of those opportunities over the last few years. But once again, it comes down to what we think is fair for shareholders. And we have the luxury of being relatively patient as well. We're not obligated to do something if we don't want to, just to hold the land in good standing. The West Air property is in good standing for 21 years. So we'll wait till it creates value for shareholders before we pull the trigger. But we're very open-minded about it.
Okay. Are there any other acquisitions out there still a possibility, or do you want to wait till things cool off a little bit and you can digest what you got?
I think for us, there are always more opportunities you could do. The large portfolio like we have now, it has to really come in and do something to change our priorities and where things are going to be in the post-merge company. So it gets harder. And, we've always been the company that focused in the top geological jurisdictions, but also the ones with the best mining investment and permitting jurisdictions. And, with this transaction, we get exposed a little bit to Nunavut, which I don't think is uncomfortable at all for us. But, we're still going to be pretty still focused in the Athabasca, and there are limited opportunities in the Athabasca right now.
Yeah. Do you have all the personnel you need right now, to move these things forward? If not, how do you go about finding them, given this such a tight labor market?
Well, I think it would be very, we have an extremely good exploration team. We're moving towards the mining side of things. So that will create some need for people going forward. The time frame we don't know. There's certainly plenty of people with familiarity with these projects out there right now that can help us. So I don't think there's a people crunch right now. If necessary, we can find the right people to help us. The beautiful part about being the non-operator on a couple of those projects is that we don't have to staff up to run everything, to run a project to fruition. We just have to have people who know what the right things are working with us to do for the operator and help them get there. So it doesn't take nearly the same amount of resources as being the operator.
Okay. Down to a couple last questions here. We have seen a lot of physical uranium purchases lately by uranium companies. What are your thoughts of doing that with the UEX treasury?
I don't think that's something that's really in our near-term future. I can see why the companies that have done this, and I mean, that's going to sound kind of strange because now that we're going to be partnered up at Wheeler River, that's, to me, that's a really great play for these companies to take the opportunity to be able to start signing contracts with that provision behind them, saying, yeah, we've got a couple $1 million behind us in case we don't meet our deadlines. So I think that's a very astute call on our part, and at a point where we think the market's going to move. For UEX shareholders, I think the reality, or they are investing in us because of what we're doing on the ground. If they want to invest in physical, they'll probably want to go straight to the physical uranium companies. So I don't see that being something in our future. We'll need our capital to work those projects and to move forward on the development of those multiple projects.
Okay, and I will save the loaded question till the last. Where do you expect the share price to go from here?
Hopefully up. That's about where we'll leave it at. It's really up to the market to decide what the value of what we're bringing to the table might be. But
pre-announcement, we're up 35%, I think, today.
So far, it's going well.
So far, so good.
The price of uranium moving in the right direction will certainly help.
Okay, and I guess I can probably point out that Red Cloud's target price is 80 cents for the company. So good. Well, thank you very much, Roger and Evelyn. We appreciate the presentation today. Thank you, everybody else, for tuning in. Again, a reminder to register for our upcoming uranium conference, May 13th. UEX will be presenting at that as well. And Red Cloud Securities will be back tomorrow afternoon when yours truly sits down with another uranium company, Encore Energy. That's April 28th at 1 p.m. Eastern. So have a great day, everyone. Thank you very much.
Thanks, everyone. Thanks, David.
Thank you, Rich, and thank you, Dave, for hosting.
You're welcome.